But the rand is one of the hardest affected, and it doesn't look like things will get better anytime soon.
The fact of the matter is this rand depreciation has been something that's been in play since 2011. That trend has been healthy. Unfortunately, we're on the wrong side of that, but it's been healthy. It hasn't gone up in a straight line, which then comes back in a straight line. It's gone weaker and it's consolidated. It's gone weaker and it's consolidated. So currently, can I see a consolidation? Yes, probably over the very shorter term, but over the longer term, I would still be structurally bullish on the US dollar, which means slightly more negative on the South African rand.
A weaker rand may buoy exporters as it makes their products less expensive, but there's a question mark about the extent to which demand can be stimulated in an environment of still weak growth and demand. The negative of a weaker rand is more inflation.
Effectively, because South Africa remains a chronic importer, it means that imported costs will likely increase. Imported inflation will likely come through. And it's why I think it's important for people to make the distinction. It's been the move on the dollar that's been the most pronounced, but on a trade-weighted basis, the rand has been reasonably more secure, or less, let's call it less weak, over a comparable time period. And so on that basis, it may well be inflationary in some respects, but that may well be offset as well by lower commodity prices internationally. That doesn't help us from an export side, but it may alleviate some of the pressure in terms of the inflationary impact of a weaker rand.
Nala expects the US Fed to start its rate hiking process in September and says the Reserve Bank will then be forced to raise rates further. Consumers will need to fasten their seatbelts because they're in for a rough ride. Nompumelelo Siziba, SABC News, Johannesburg.